Business means Yuka Roy is here on set. Great to see you.
Hey, Mark.
The Chinese electric car issues are coming to a bit of a head here. Chinese cars set to become more expensive from next month, with the EU threatening to hike up tariffs. Do explain.
Well, Mark, for months, the European Commission has accused China of flooding the European market with cheap electric cars and has been investigating whether Chinese car makers are benefiting from unfair subsidies. Based on its preliminary findings, the European Commission on Wednesday informed China that it would slap import duties of up to 38% on Chinese-made EVs from July the 4th, stoking fears of a trade war. Betty Bahel has the details.
Unfairly subsidised Chinese electric vehicles are a threat to Europe's car industry. That's the provisional conclusion made by the European Union as part of its ongoing probe. In a move that could trigger a trade war, the bloc has threatened to slap new tariffs on Chinese electric vehicles unless Beijing provides new evidence to challenge it.
The Commission has also pre-disclosed today the level of provisional countervailing duties it would impose on imports of battery electric vehicles from China.
The duties on battery electric vehicles would come on top of the existing 10% import tariffs, with the levels split by 3 brands sampled. The world's largest EV maker, BYD, would have tariffs applied at around 17%, Geely at 20% and SAIC around 38%. This top rate will also apply to other Chinese BEV producers who didn't cooperate with the probe, whilst those that did will face 21%, as well as Western brands that produce EVs in China. Beijing blasted back at the new duties, saying it would take all necessary measures to safeguard its interests.
Protectionism has no future, and open cooperation is the right way forward. We urge the EU to honor its commitment to supporting free trade and opposing protectionism, and work with China to uphold the overall China-EU economic and trade cooperation.
The duties will provisionally apply from next month and definitively from November unless a majority of EU member states vote against it. Germany, Hungary and Sweden have expressed reservations. A major trade partner with Beijing, Berlin is concerned about its exports to China.
So let's put this into some kind of a context. Just how much of sales of Chinese-made EVs been growing in Europe? Tell us.
Well, they have been skyrocketing, Mark, with the total value of imports reaching about 10 billion euros last year. According to Eurostat, EU imports of electric cars made in China, including of Western brands, have increased more than 7-fold over 4 years, while EU exports to China stagnated. The share of China's homegrown brands in the EU's EV market has also multiplied and is expected to reach 20% by 2027, according to a recent study by T&E Mark.
So how does China support its electric car industry? Tell us about that.
Well, China's economy as a whole is supported by the government across different sectors to achieve the state's economic development goals. In the case of electric cars, support includes orders for government fleets, low-interest loans from state-owned banks, cheap land for factories, tax breaks, as well as subsidised raw materials and parts from state-owned industries.
Moving on to the United States, where the Federal Reserve has decided to keep its interest rates unchanged once again.
Well, unlike the European Central Bank, which recently announced its first rate cut in nearly 5 years, the US Central Bank has decided to hold rates steady at the current range of 5.25% to 5.5%. That's been in place since July of last year. It has also scaled back its forecast from 3 rate cuts this year to just 1, despite the latest data released earlier in the day that showed inflation easing for a second straight month in May. It says that while progress has been made on inflation, risks remain and projects its benchmark rate to drop to 4.1% at the end of next year and 3.1% by the end of 2026. Here's Chairman Jerome Powell speaking earlier this evening.
If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks.
The Federal Reserve's announcement may have been a disappointment for traders, as some had hoped for more more cuts to be penciled in for this year. But Wall Street kept up its momentum after wavering a little bit after the announcement. The S&P closed above 5,400 points for the very first time. The Nasdaq also finished at a fresh record high. And that's it for business.
Yuka, thank you very much indeed. Pleasure to see you. Yuka there with all the business.